Today we look at charts if there is any opportunity. I was looking at charts already, and for now I'm just waiting. We always, and you know that if you showed up to the previous lives, you know that I always look for this, is internal and external liquidity. So right here we were looking for external liquidity, we go above it, we have a pullback. Then what happens after? We go for external liquidity, we go above it, we have a pullback. Yesterday here we had external liquidity. What happened? We went above it and we had a pullback. Unfortunately here at this time of the day, I don't really, I do trade, I just wasn't trading yesterday at that time. But anyway, there was no confirmation. Because I was looking this morning, looking to make a case study, but there's no really good confirmation right here in order to take this trade. As I said already, when we go for external liquidity, audio is strange today. Let me see, I don't know. Is it better now? I mean, if it's better. Right here in order to take this trade. As I said already, when we go for external liquidity. Well, let me know. Let me know if it's better. Anyway, I was saying, this is one of the most important lessons that you will learn here with Excel. Of course, the source is available only for Excel students. You can go and join down here in the links. But super important thing is when we have a previous high, and still the same on the opposite way if we have a previous low. So even if we're going to the downside and we're approaching the area, when we want to look for confirmation, if first we touch or even break this area, then retrace, give a change of character. Well, not actually, retrace, continue, and then give a change of character. This pattern will always have less accuracy compared to a pattern where the microstructure is still going to the upside. Here we break, we never touched the previous high yet, we didn't grab the liquidity yet, we break to the upside, and then we have a change of character. In this case, this is a way better confirmation compared to the previous one, where first we touch, retrace, continue, so we have basically a double break, if we want to call it that way. And in this case, it's way better to just have a clear break to the upside without ever touching before the area. So here, this was not really, this was more of this type of confirmation, which I don't really like, and therefore I avoided trading it. So for today, as far as today, first of all, we want to start to look for liquidity, right? And also, other than liquidity, we also want to look for, most of the people are getting stopped out. So most of the people are getting stopped out, I believe, right now, with this change of character, which I believe is a fake change of character. And that's why I'm not trading it. Perfect. Right here, we are already confirming it. We haven't broken to the downside yet, but anyway, I see this as a trap for most traders. You can call it whatever you want, but this is a fake change of character with break to the downside and then a break to the upside. And I believe that we're about to stop out all the traders that are entering from possibly this demand area. Fake change of character is the sauce, guys. Fake change of character is the sauce. You need to learn how to differentiate between fake change of character and good change of characters, which basically means good confirmations and bad confirmations. This is all it is: good confirmations and bad confirmations, good change of character and bad change of character, liquidity, and just good patterns and bad patterns. I say this stuff at every single one of my live tradings, but I keep, well, not right now because I'm in Italy, but at my house in Canary Islands, I always keep all of my printed charts next to me, and it's super important, in my opinion, to print out your charts, because you will train your eyes to actually see things. You train your eyes to see the opportunities, and of course you need to also do it, have a plan, have a systematic plan and everything, but at the same time you need to also train your eyes. It's easy, just train your eyes. train your eyes to see things. And how do you do it? Repetition. So I have hundreds of charts, thousands actually. I have, let's say, hundreds of charts of the good trades and hundreds of charts of the bad trades. And I just train my eyes and just looking through it, a lot of repetition, a lot of looking at charts, a lot of looking at the good patterns and looking at the bad patterns. All of these things help you get your eyes trained. And when you look at charts this way, you will start seeing all the good patterns that the wins have in common and all the bad patterns that the losses have in common. And at that point, as I said already, you train your eyes, you get your eyes used to seeing certain things. So if I look at hundreds of charts of good trades and I see that they have the same things in common, that the wins have a lot of characteristics in common, and the bad charts have a lot of characteristics in common, then I will just get my eyes used to actually, recognizing it. Nice. So let's look for liquidity. This is where we start. When I start trading on charts, first thing I look for is liquidity. Well, I don't want to go on the 4 hours. I don't want to go on the 1 hour for now. I just want to look for liquidity. And we need to identify liquidity correctly. And then after that, we can move on. So what did just happen? What just happened was that we broke here to the upside, and which is the move that breaks structure, because a lot of people will see this break to the upside, break to the downside. They will think it's a change of Carter, right? But it's not. They will see this, they think it's change of Carter, it's not. This could have been actually a nice trade from yesterday, but that's another story. Why? Because we chart the highs and the lows that are in control. And let me pull up the chat again, because I don't want to miss messages from people in the chat. And as I said already, you should take advantage that I'm going live, because until a month ago, the only way to communicate with me was to actually get in one-on-one calls with me, which are pretty expensive. So right here, which are the highs and the lows in control. This is the low in control because it created this move to the upside, which broke this structure. And after breaking that structure, we went again for internal liquidity. Internal liquidity, which was this one. Price moves from internal to external liquidity all the time, right? So internal liquidity. We can mark out this demand. We can also not mark it out. I don't really care about marking out supply and demand areas if we just know that they are there. Let's go on the 1 minute, because I just want to double check it. Perfect. Here we break to the downside and then we start going to the upside, and this was the correct confirmation. As I said already earlier, we don't want to trade the move that already touches. So let's give the example. If this was gonna happen, if the structure was approaching the liquidity and then we touch it, retrace and break, this is basically the double break. This is not the most accurate pattern that we want to trade as confirmation. But in this case, we had this structure, right? Break right away. And then we retraced right here. This is not confirmation. There is no confirmation about this, but then we break to the upside. We break to the upside and we break the supply that grabbed the liquidity. So we went from internal to external liquidity. It's pretty simple analysis. We just go price moves from internal to external liquidity all the time. Here we grab the external liquidity and we can have possible sells. I will actually check that out as well. Together with the Asian range confluence, we have Asian range. We go above the Asian range. External liquidity taken, retracement. Where do we go? We go for internal liquidity. A lot of people are getting stopped out because they want to trade from this demand, but this demand is liquidity. This is not a demand. This is not a demand. This is liquidity. We go below it and we have a confirmation, as I explained already. Good confirmation because of the characteristics that I explained. Now, the confirmation, where does it happen? It happened here, once we break this. Here is our good confirmation.